over. Hey guys, how was your Tuesday?
Pretty good, actually, Scott. Thank you. Hello, Andy.
Hey, Steve. Hi, Scott. Hello, everyone.
Yes, hello, everybody. Welcome to the trade of the week. I often remark to Andy how quickly the weeks go by in life, and this moment always seems to mark like I can't believe it was another week that just passed, but here we are. The Trade of the Week webinar. Thanks for tuning in, guys. As people slowly file in, they know the drill. We've got a few minutes here of slides to go through just to remind people. We are a software company, and Andy and myself are traders and also employees. We may have some opinions occasionally, but nothing we say should be construed in this webinar as financial advice. If you need that, you got to go seek out the right people who took the 15-year-old product, and Andy and I help people find that method and that direction that you want it to help take you in, and point you in the right direction. And we can do that a few different ways in Barry's live trading room, for starters. It is a room that rivals a lot of other rooms that might charge you 75 or 99 bucks a month, because there's good ideas being kicked around, there's good traders, there's good banter, there's good chat, and there's excellent demonstration of our software. And that's what Barry reminds us. Send people into my room so I can demonstrate something. If you're having an issue and you're a brand new user, it's always available from bell to bell pretty much. Then we have the afternoon webinars like we're talking at you right now. And then the daily support session is something at the bottom there, and we'll go to the next slide. Just a reminder that Barry chat room on this YouTube live stream every day from noon for 1 hour. One of the 5 of us here, Jamie, Michael, Sean, Andy, myself, will jump in and take over. I did this today, and tomorrow will be one of the other guys. But it's another great place to pull up a chair and get live support. So if you were to sign up this afternoon and you've already got a couple questions by tomorrow at noon Eastern, please, by all means, come in and use this forum to help get you going, because we cannot demonstrate over the phone, but we can demonstrate over the live stream YouTube and give you a much better quick start going. So please join us there as well. All those things we really try to help get you guys into a short learning curve, because we know it's a very rich product. As I said, there's a lot going on here. So it takes us to our theme, which I use every week, human and machine combined. We pretty much know that from the data, the AI is pretty good at creating value for entry signals. That's always the hardest part, where to start, especially for a new user. The next hardest part is how to get out and how to manage that trade. A lot of people don't want to make their own management in their trades, so they use the AI to get out. But we have really literally seen the traders who go into moderate mode, and Andy can explain that further, manage their own exit and use a couple of just simple of momentum indicators to manage their own possible exit, and they seem to outperform the AI. And that's a great example of what we're saying here. Man and machine, human and machine work best. Not turn on the machine, turn your back, go play golf and expect to have a deposit each day at the end of the day. That's not realistic. So the machines, in this case, Trade Ideas, is curating the data for you, and the human takes the curated data and gets much better results from the decision process doing it that way, rather than just trying to drink from the fire hose that is the market of 8,000 stocks. That's pretty hard. And that's what Trade Ideas does. In real time, it really condenses what you want to look for, whether you're a scalper or a swing trader. So here's our agenda for today. I'll start off talking about market recap, interesting things, AI recap, a couple of trades over there, nothing really to write home about, but Andy can pull out some ideas and nuggets. Trade of the week was a good one this week, and we'll talk, there's a lot of things we can talk about for sure. And then I'm going to refine the A table a little bit. I had some thoughts, and we can do that live, and I'm hoping Andy will help me a little bit. And then time permitting, take a look at the sectors and either set some alerts or chart requests. We'll see if we have time. All right, so let's get right into it. By the way, I'm pretty bullish on X. I'm happy to say I think X might be a long-termer, and I'm long that in my account. But let's look at the S&P 500. Not much has changed since what I said with Jamie yesterday, although I've got something I do want to point out. Again, I'll remind everybody, this was the respective high from before the precipitous drop that put us into the world's shortest bear market down here, and the big bounce setting higher lows as we go, and we haven't stopped setting higher lows as we go necessarily. So there's really not a big bear case to be made, as I like to say. The moving averages are holding the price above for the most part, All we had was a simple little mid-summer, mid-July candle there today, bit of a gap up and sold off a bit at the close. Nothing really going on. But I want to do something. I'm going to also bring up the Qs first and put up their respective, just to remind everybody that the Qs have led the march higher because they didn't have a lot of energy, oil, and financials built in. It's mostly technology. And the COVID economy has been very, very kind to the technology companies. We'll say that for sure. But you can see above the orange line, and we put in kind of a little, not quite a double top. We tried to make a higher high, but didn't quite get there today. And interestingly enough, the SPYs were positive for a lot of the day. Again, let's look at the SPY. We had a gap up and just sideways, and then kind of coughed it up at the close, whereas the NASDAQ started positive and immediately went south and stayed red for most of the day. Bit of a bifurcation over there in the NASDAQ, and we also noticed that we've talked about this before, Andy and I, in the webinars. The VIX seemed to be really following the NASDAQ today. Didn't really care much about the S&P 500. It was looking at the NASDAQ, and so it was showing a little bit of caution today. But here's what I want to do real quick. I'm going to add an indicator. Again, I don't really see much of a bear case that's out there. You know, you're basically waiting for something to happen. But sometimes we can see and we can telegraph a little bit when the market runs out of steam. And I'm going to do this. I'm going to go back to the SPY, turn this off, and I'm going to add a simple indicator. I'm going to add relative strength index, RSI. This kind of gauges the umph of the moves to new highs. And there it is in red. So I'm noticing, let's start with the NASDAQ because I think it's kind of prominent there. The NASDAQ, as it almost matched prior highs, really did so on much less inertia. And I can even undraw that and go back to this high back here. We definitely have two new highs up here, but look at the inertia. It's just not really sloping high. It's slowly running out of steam. This is something that's called bearish divergence. I think there's a case that could be made that we might be seeing some bearish divergence in the market, and this is the closest thing that I've ever experienced that can kind of signal a possible change. Again, we don't see a price action change here, but this RSI is kind of lifting the hood and saying, you know, it's looking at the relative candles and closing, how high the close is to the end of the candle, to the high end of the range, excuse me. And you can start to see when things are running out of steam. So I thought I'd bring that up today. Look at this respective high back here. And we set a new high in the SPY, but looking at the RSI, it really doesn't want much to, let me do a better draw of that. It really doesn't want much to do with that. It's got kind of a negative slope to it. So I'm seeing that, and you know, just kind of something to keep in the back of your mind. That, along with what I mentioned earlier, the VIX showing a little bit of bounce today, even though the S&Ps were strong most of the day. I found that to be kind of interesting. So that's really all I've got for the market update. You know, we will talk a lot about silver and gold as we get into the webinar because it has a lot to do with the trade of the week. But is there anything else that you would want to add on the market observations here, Andy?
Yeah, you're moving through pretty quickly. You must have a lot of good content. Yeah, I'm over here trying to put together some content for Holly and answer questions, but you know, no. I mean, what can you say? I mean, we're basically just motoring higher. If you put it back on the SPYs real quick, I'm not sure.
Mm-hmm.
Go ahead. Are you making some new moving averages there?
No, I was doing I was doing a relative strength index.
Oh, okay.
And it was showing some bearish divergence. So
okay.
I'm trying to delete it actually now. There's something in here. I think.
Okay.
I don't know what I've done.
Well, no, there's. I'll take the thing away. There's not a whole lot to add. You know, a little bit of weakness here on the close, and then a big old wick there. So I'll grab it. There's not a whole lot I want to add to that. So
all right,
let me grab it while you're in no man's land right now.
Yeah, no kidding. Okay.
All right, guys, let's talk about a little bit about Holly. You know, so day. I mean, there's not a lot to write home about. These are all the trades I pulled up today. It's getting to that point where I expect Neo. You know, I will say this. You know, when there's a gap up, it's really hard for. And it wasn't that much of a gap up today, but still, we had a pretty decent gap up. in the SPYs from the yesterday close around 324 up to around 326 there. So made it a little bit difficult, throws off a little bit of the parameters that we set based upon daily chart patterns. I say we set. Remember, we give Holly the basic strategies, and then she takes them, and then she does her magic in the evening, doing just tons of back testing, thousands of different scenarios over and over and over again, and then certain strategies will make the cut for the next day. But boy, it's just not. Here's NEO today. I mean, you had a couple of winners, and you had 3 of them that got stopped out. One was basically a flat. So really nothing to show. I will pull up because we did have a really good trade in the other segments today. So I'm gonna go ahead and pull up all of them, because some people do follow them all. And in conservative profit, this HRI was a nice little trade today. Fired off at 35, almost got to its target at 36. And then if you followed Holly's out, sloppy day, gap up, Q's weak, had a bifurcated market as most of the day, which means the SPYs were up only because the oil was still strong today. The energy stocks had a really good day. But nonetheless, looking at the market that Holly had to work with, gap up, a lot of slop, selling off, going to lows, went negative actually a little bit there in the SPYs before bouncing at the close. But other than that, a couple of good shorts from the NEO today. And this one right here, this ACAD, and this one wasn't too bad. Yeah, I mean, not a whole lot, but about, I guess, 40 cents there. But I'm not going to sit here and kick this back and forth, Steve, because basically you had some winners, you had some losers. Honestly, it was just a ho-hum day for Holly, and I'm not going to try to sugarcoat it. You know, there's days where there's just, you know, not a lot to talk about, and today's one of those. Some days there's tons of stuff to talk about, but today is not one of those days. So I'll pass it, because honestly, I'd rather talk about the trade of the week. Steve had a really great call on the trade of the week, so I'm going to pass it back to him and let him talk about that.
All right. Yes, and it's just a reminder that you can't get bogged down in a day by day of the AI. Is it going to produce great results every day? No, but we call it casino odds. You know, the casino has good odds. Every now and then they're going to get a good blackjack player or a baccarat player come in and take them for a couple of days. But at the end of the month, they still come out ahead. And when we aggregate and put all those trades together, in the long run, they're doing pretty good. So the idea is we're generating decent concepts with some statistical probability behind them. In other words, especially for new traders, if you don't know where to start, we're trying not to get you in trouble, put it that way. All right, so I'll let Andy get back to the questions there, and got a good crowd today. I did mention that we might take a couple of chart requests at the end, so if we have a little bit of time, if you want to sit on it for now, but when we ask for it, if there's something you're currently in or thinking about getting in, it's always nice to know if you're long or thinking about getting long. We can take a look. All right. So a lot of times the trade of the week is generated from a specific, wrong slide, a specific alert. And in this case, there was no particular scan that selected the trade of the week this week. And that happens sometimes. There's no, magic bullet that you go to every single time. And this week I wanted to kind of talk about how you break down from top to bottom an idea for a swing. And there's a few pretty good salient points I think we can touch on here, and you guys might carry away with you. So the first is, as I mentioned, there's no alert showing and screaming AG at me here. It's kind of a process of elimination. Going out on Friday, this is what the sectors look like. Gold miners were looking pretty strong. Silver's down here at the bottom, but silver is kind of included in the gold miners as well. Silver and gold miners will probably make up the majority of the GDX. So from a top-down approach going on to the weekend, we knew that the strong sector was, GDX. And again, I looked around and I didn't really see anything jumping off the page, off the A table, which we'll talk a little bit about later, or any other specific scan that we've used in the past. So it was a kind of a process of elimination through some of the tools that we've got here. So starting with GDX, I knew that silver was strong, and I was watching also the silver. This is before today. Here we go, right there. That's what silver looked like going into the weekend. and this is what we're going to try and scan for a little bit later as well when we get to the next topic. That is a beautiful compression above, sideways action compression above the 10-day moving average here. And so I just like the way silver looked better. So here's where we went. I said, you know, the number one silver stock out there I like right now is Pan Am Silver. I've been long this for a little while, and I've talked a lot about it as well. Here's where it gets a little fun. We can take that and we say, let's take a look at all these silver stocks here using what we call this similar tab. So again, top from bottom, gold miners, silver miners. Pause is a very, very popular silver miner. And it didn't really have the look that we wanted, because if we go back, look at this. This is what we were looking at on Friday. Things were starting to break out. I was noticing that. So I came over here and we go to the magic similar tab. All of a sudden, we've got these list of ideas. How about that? Forget that one. But here's what I'm going to do. I'm going to roll back 2 days. So look at this. This was looking pretty interesting that day. Let's see if I can keep the chart. No, the chart keeps resetting. That's our AG. So AG looked like this. Remember what pause looked like? It had already broken out a day, looking like that. So what I'm getting at here is this similar tab is an excellent tool when we start to notice that stocks like PAAS are breaking out. Well, are there any laggers? And the lagger concept is a good concept if you want to be trading kind of stock specific or sector specific strategies. You know, I'm going to go through here again because there was a couple. This one I've never heard of, but it had already taken off. There was another one I was thinking of. Yes, SVM. Look at this. This was the other one. So I was noticing SVM, Silver Core, which is a great one. And I was noticing Pan Am, pause. Both of those had already broken out of their respective congestion above the beautiful moving average sideways and stuff. So all I did was come back and say, you know, again, and I get some of your guys' email. They say, hey, you know, some of these trade of the weeks at 150 bucks, I can participate, but it's a lot more fun when you find things under $20 because it feels like we can buy more shares and sometimes we can get bigger moves. All right, fair enough. I know that. That's kind of how the mind works. But going back, this was the look right there. Imprint on this, guys. This was the look of AG going into the weekend. Again, when SVM was already looking, oh shoot, I've already lost my perspective, was already looking like this. Pause was already looking like that. So AG was a clear lagger looking like this. This is just a beautiful little setup. So we selected AG on the top-down approach based on that criteria. So that's really where I want to kind of take you on this is it doesn't always have to be one magic bullet coming out of a scan that you love. There's a way in which you can kind of work from top to bottom. And again, you know, there are some really good looking companies on here that might reset. Now, I think we got ahead of ourselves. Big old doji after big move in Coeur d'Alene, which again, I'll pull back. That's what Coeur d'Alene silver looked like on the weekend. So I think you're getting the picture. I don't want to just beat this dead horse, but 2 days ago, AG had not made the move that a couple other horses in the race, we'll call it, were making moves using our similar tab. You know, you could do the same thing and pop in Newmont Gold, which is the kind of gold standard, if you will, for Newmont. And then you might start to get some really interesting other ideas. Hey, this thing just came out of nowhere. SMTS, I've never heard of that, but there it is. Trade Ideas Technology helping kind of show you what some of the possibilities can be there. All right, so let's talk about, there's more to talk about, the entry. So once again, the entry was a gap. And I know that's not ideal. And I even mentioned in the email that chances are we felt that this thing very well could likely gap up. So let's talk about, again, we've done this a couple times now. What are your options when a stock is gapping up? All right, and the area that we're focusing on here is right here. Okay, this was our opening yesterday. The actual trigger was around, I believe it was 1077. So we'll just go ahead and draw that line, mark up 1077. So we obviously didn't get the price we wanted. Now, when a stock gaps up, we have a few choices. And I might even add that I think what's happening is some of the people might be getting the emails. Well, a lot of everybody's getting the email before market, pre-market. So let's go to pre-market. And let's back up to yesterday. Well, interesting. You see there's our entry line. This alley right here is pre-market. So these prices, what I'm getting at is option number one, there's nothing to prevent you guys from logging into your broker and putting in a limit price and seeing if you can get it pre-market if it looks like it might be gapping up. So if you didn't do that, you missed that option. Let's turn off the pre-market so we can talk about option number two. Option number two is to decide to chase the gap right as it opens. Let's be real here. I mean, 93, it was a 15-cent gap above our trigger price. You know, it's not that big of a deal. So option number two is probably a good option. Going to grab that. Option number three would be to say, a lot of times these gaps get filled and I like to get my price. I'm going to wait for the gap to fill. Option three did not work. Option number one was good, pre-market. Option number two was good, grab the gap and hope it goes. Option number three, waiting for a gap fill, this time did not work. Option number four is pretty much what I talk about ad nauseum around here. Beautiful sideways action after a small gap up. If you didn't take the trade here, then you're chasing pretty much. So this is the fourth option. And you basically had four ways in which you could have grabbed AG on the trade of the week, but 3 out of 4 of them would have worked. Waiting for the gap fill did not, and that's obviously the most frustrating. However, I will give you this: since the gap fill in option 3 didn't work, you really should be working into option number 4, that is, and waiting to see around an hour and a half after the open on a 15-minute chart here if you can get that sideways action. And usually, more often than not, if the stock is going to move and I'm going to go into momentum mode, this is the area that's going to, pass the test right there. So there was that to talk about as well. And I think there was 3 out of the 4 last weeks. Our trade of the week has had a similar gap open. Yep.
I just want to throw in one more option because some people do trade like this. You had that 15-minute high break. So in other words, there was a range, a 15-minute range, and then in the next 15-minute candle, it took out that high. So some people could play, the 15-minute range break, which would give you a good price as well. So.
Yep. So a lot of good options. But don't forget that pre-market is available to you. There's not as much liquidity in there, and the people that jumped in their pre-market that got the email and decided to take it, they were rewarded. The people who didn't chase the gap, they were punished. Now that's not saying that every trade is going to be like that. There's going to be a ton of ideas where that gap does come back, and if you do wait to be filled, wait for the price to fill the gap, then you're the smartest guy around. When it bounces on your dime and moves higher, you feel pretty good about that. So I just felt we needed to talk about the entry again because we've, as I said, the last 3 out of 4 weeks, we've had a gap type option for entry. All right, any questions relating to this I need to fill?
I think I can get it, answer them.
Yeah, the pre-market, real simple. I see one person asking, right click and go to properties, and you can see pre-market or post-market right there. And any user guide, or yeah, Andy can drop you some links on that. All right, so that's our trade of the week. Again, the genesis was a top-down approach. How did the market go out on Friday? Big sector, big moves in silver and gold and miners. Looking for the similar tab in our single stock window to find a lagger. And boy, when you can find those are pretty good high probability setups, and I think we'd all agree that worked. There's one more thing I would add. I didn't trade this stock because I'm in a lot of other things, but I'm glad I thought about this too. All right, this is very important. Andy and I have talked a lot about when you get your moving day. I'm going to call yesterday moving day. Right? Like in golf, the Saturday is moving day when you move out of the field and out of the congestion. When you get a big moving day with volume, get ready to sell. If you're a short-term trader and you want to book profits, get ready to sell pretty soon into the following day. A day and a half is what Andy and I used to call it. Now I looked left over here, so zoomed out and looked left, and oh my God, wouldn't you know it? Wouldn't you know it? Let's go ahead and draw. Well, actually, we'll draw the price alert instead. And we'll go back and we'll superimpose that. Look at where the selling jumped in today. So there was a beautiful gap, push through the gap. And look at that, you could not get one candle to close above that resistance level. And why is it a resistance level? Because we zoomed out and we looked left. So this was a perfect textbook place at which a lot of people could have taken half off. I mean, if I was in this one, I would have, but I'm in some other things. But this was a classic textbook case of moving day, getting a follow through gap, and then start thinking about taking profits about an hour into the day, because especially if you can look left and see a reason technically why, and we did. Yep. All right. Let's move on. So what I wanted to move on to, again, was there was no particular scan that we got this week, but a lot of times when I do get some good trades, it does come from this A table. And again, we're coming off the heels of talking about what did AG look like a couple days ago. It looked beautiful. It looked like that consolidation. And a lot of people say, oh, the A table, cool, but I always have to give out this caveat when I send it out. I'm like, hey, you don't just pull up stuff and buy it, APT, but well, APT is just run 5 days. You probably don't want to buy it here. So it behooves the eyeball to go through and find these things that have not run 6 and 7 candle days. And so it occurred to me, well, why couldn't we just use the trade ideas filters to try and filter those out? There we go. We're looking for stuff like this, red hat right there. So how can we make it easier, is what I'm saying, for newer traders, because newer traders don't always know how to flip through these things like I do in the 40,000 hours I've got looking at charts. So what I want to do, and hopefully Andy's will help me a little bit here, is to try and find a way to not find charts like APT that have run a lot. Some other extended charts if I can find any. So we'll go through and I'll show you how we might do that. Anytime I try to refine a scan, I'm going to want to work on a duplicate copy. So I'm going to duplicate my A table and we will work on this one. So the first thing I noticed that we should probably do, because there's not a lot of filters in here. These are stock composite ratings of a score of 80, which means these are decent looking, trending up on the daily. But the big component was the short float. And I thought, well, let's just take the short float out of there for one, because we're probably missing a few things. But again, what I'm trying to avoid is stocks that have shown 6 consecutive candles. I don't want to see those anymore. Maybe I just want to see things that are compressing, like those silver stocks we're doing last Thursday and Friday. So we're going to use some logic here. What I want to see to show a daily chart that's compressing. Well, we've got some filters that can look at a 5-day period, and we're going to focus on those. So I'm going to just do 5-day. I'm going to add 5-day range, $5 foot long, add that filter, and 5-day range and change in 5 days. That was the other one I want. So we're going to just try and focus on these two, because again, that score filter, for those of you who don't know, stock composite rating, it's kind of like a bell curve in school. We've got about 10 or 12 technical indicators in there that are all given a score. If you're underneath all your moving averages, you're going to get a low score. If you are above all of your moving averages, you're going to get a higher score. So we leave out all of the individual guesswork and brain surgery and just say, if I put 80 in the minimum, let's say, show me the B students and the A students. I'll take all the 80 and 90s. Leave out all the C and D students. So that can accomplish a lot for you just by that particular setting. And my other setting is average daily volume, going back 3 months, is 500,000 shares a day. Other than that, I don't have a lot in here. So that's why I'm getting a lot of things that have run. And if you bought them here, you'd be pretty much chasing. We don't want to chase things that have left the station already. So let's talk about how we can maybe try and find things that are still looking good. And we're going to get rid of the short float. We don't need that anymore. But I only want to find things that are kind of compressing. So we're going to use these two. Let's start with change in 5 days. I'm going to use that, and these are in percentages. So if something is up, 10% in 5 days, I probably don't want to see it. That's probably going to be a bunch of green candles, and I don't want to chase it. But if something is up no more than, say, 3% as the max, and not down more than 3%, we have a little 3% range. Or not the range, we'll get to that in a second. This is the net change. So where was it net changed after 5 days? So no more than 5%, no less than 3%. And then the 5-day range, I don't want that to be more than 3%. So what that means is going back on the 5-day range, we'll pick the low of that 5-day, that'll be low, and we'll pick the high of that 5-day, that'll be the high, and that distance cannot exceed 3% now. So that too will also suppress those super long consecutive candles that have hopefully that have left the station. Hopefully we're going to suppress those. So let's just jump in and see what that gives us on a first glance here compared to our other one. All right. Yeah, still a lot of returns. And what I also want to do is I'm going to just configure, I want to add that column. So if I go to column, I should have that 5-day range. I want to add that column and change in 5 days. Let's just see what we get. All right, so now I can start to go through. Okay, I'm starting to see things I like. You see how we have a little bit of nice compression there. That's not bad. So essentially I would come through. Well, we'll maybe come back to that. Again, another nice, nicer tight range. Ooh, this is pretty decent. Costco, I think we've all heard of Costco. Pulled back a bit on the close, but this is really textbook, guys. This is really what I'm looking for. So Costco was probably on here, for most of the day. Let's just ask ourselves, was Costco on here yesterday? Because I would have loved to have seen that chart right there yesterday. Would love to see. I would buy that chart any day of the week if I had money and buying power that was looking to go to work. Okay, this is exactly what we're scanning for. Let's go back and see if it was yesterday. So time frame, historical data. Just go back to the close. I'm really hoping it is. I'm winging it here. 720. That we'll do close to the close. Hey, perfect. Costco was there yesterday. So this is the kind of stuff I want to see. Now, again, this is my first run, and I'm seeing, I'm seeing some spiky stuff and some interesting things that might not want to be in there. But for the most part, I've gone through the first few, and I'm seeing what I want to see. Let's go back to live always here. Oh, perfect. I'm actually long this right now in my 401k. TLT. This is the Treasury ETF. You don't get much more triangularly wedgy, coily, springy than that right there. The key is it's also above all of its moving averages. So let's talk about what to do when we see these things. When I see a wedge, I like to go back like maybe a couple days and look at that high and just say, I want to know when this thing breaks that blue line. And when it does, I'll probably be ready to log in and buy something or buy it. Costco, we would have done that. Oops, I'm on the wrong one. Costco, we would have done that for sure yesterday and triggered that. I probably would have put a trigger in right about there yesterday for Costco. And you'd buy it and you'd pull back, but you'd be probably flat for the most part, but no harm, no foul. That's a pretty darn good looking daily chart. So reminding you again how you can use the price alert in conjunction. Come here, you say, you know what, that's a pretty nice tight range. If that range breaks out, I want to know about it. Might even adjust that one a little bit. Yeah, I'll make that right there. So we're doing a 1-2 punch now where we are refining our top list window. We're no longer getting these train that has left the station ones because I was primarily just looking for big short squeezes over there in the A table. So I've turned off that. We no longer concern ourselves with short floats, short squeezes. We're just trying to look for strong stocks with a good score. And oh, look at this, there's another one. I don't know what this is, but that's okay. That's the 10-year Treasury. That's why it looked good. It looked just like the other one. Oh, you know what? There's some things we could probably do here. We could probably add some earnings per share, Andy, like to knock out some of these crazy obscure ETFs if you don't want to see them. But can you think of anything else we would do? SPTL. This is another Treasury. They're all kind of looking the same here, but that's nonetheless, it's a beautiful chart. Anything you think I can add to this?
You did the right thing. Making those tight ranges like that. That's that's a very. I mean. And if you wanted to, you could do it with you wouldn't have to use score. If you want to broaden your horizon and look for other stocks, or you can maybe bring the score minimum down to 70. But I think Steve's.
Well, I feel like we've got a lot in there already. Yeah. So
you're going to find some strong stocks. Yeah.
Here's one more thing I'll do for you guys. I'll show you before I had it, and I like to colorize these things off of something. So if I'm going to colorize them, I think I would colorize this off of 5-day range, maybe. I don't know, or maybe change. I would do change in 5 days. So what I would do is I would come in here and we go properties, select color, and we want to key off of 5-day. I'm going to do 5 range. 5-day range. Okay, and this is going to become our color palette right here. And I would probably just change these values a little bit to what I would do. I'd have a couple of negative values. So I'd do like a -5. Add that, and no, I'm sorry, -3. Add that, -2, -1, +1, +2, +3, and then having those. Let me delete these. So what I'm doing is kind of setting up our parameter here, and then I can come in and do something like this. There we go. I'll get rid of that one too. Delete. Okay, so now those are our colors. If we sort by 5-day change, or 5-day change, there it is. There's our beautiful color array. So I didn't do the colors quite right, but nonetheless, that's how you can add colors to these top lists and start to see how you want to sort for them. So that's all I've really got on that. Other than that, I would say I would give this one a new name. I'll call it the AA table. And anybody that wants to take this and perfect it, I will be happy to send it out into the chat sphere right now. I'll drop it into the chat window. AA table. Paste. All right, so that's how you can kind of modify ideas, and I'll tell you those position and ranges or those 5-day ranges, change or compression, they really do come in handy. What was there? One more thing I was going to talk about. Yeah, let's see, sector glance, and let's do this. I'm not going to set any more alerts. I kind of showed you, how I like to set them. Just look for those beautiful sideways flagging, let them trigger for you. But we'll end off here on today. Perfect example. I'm so glad I thought of this too. I am long OIHs, and I was literally thinking, well, should I take profits? No, Steve, I was pounding myself in the face saying, why would you take profits? A couple things, Steve, and this is going to dovetail nicely with what we've been talking about. Can't ignore that volume bar. So I said, whoa, what's going on over there today? So what did I do? Let's just grab like ConocoPhillips, big component, single stock of the oil service sector. Similar. Here we go with the similar tab. What's happening in the OIHs today? Oh my God, look at that. Well, that's a giant breakout. That's not much there. That's a pretty good bar reversal, big bar reversal. So basically, breakouts across the board here in Oxy and a lot of these OIH stocks. I don't think that it's going to be a one-day event. So I had to force myself to not take profits today. I'm going to stay in this thing. And the similar tab really helped me because I walked in there and I just saw every single, but a lot of stocks individually breaking out on their own. It was very impressive. All right, so back to sectors. Can't be ignored. I'm probably going to see some follow through on the OIHs tomorrow. Silver, I haven't seen silver up 7 or 8% in a long time. Probably ready to give some back, but that's okay. I'm going to sit with my stuff for longer term. Energy sector, again, kind of going in the heels of the oil sector. Energy and oil had a really good day. Probably going to see a lot of follow through tomorrow. The banks didn't have a bad day at all today. Kind of unusual to see the banks up there near the top. Retail. But now what I want to look for is if we can see anything that's been lagging or compressing like this gold miners were 4 days ago. Let's see if we can find something. Okay, XLF, might be ready to break out. You might be wise to pop a price alert in there. And if you have any favorite banks, stocks that go tomorrow, might be fun to watch those. Oil, that's a tough ETF, but certainly mirroring what happened. Gold, they've had an amazing run. They're probably due for a little bit of a pullback. I'll tell you, this is a good one. All right, I got out of JetBlue. Because I talked before about what we call a pro gap. This is a pro gap, a downtrend in the moderate downtrend, and then a reversal on the gap. These typically follow through. Typically, 1 day. Okay, I'll sit with that. 2 days. All right, I'll give it a little bit more. But if this thing can't go through, all right, you know what? I'm out. Forget it. If this thing can't follow through on a pro gap, I don't want to know. And the problem is, Love Airlines looks the same. They've got earnings on Thursday. anybody can sit back and make a great case as to why the airlines might disappoint us again. So I didn't want to stick around for earnings. But the point is that the airlines, they didn't do very well. They pulled back after a very decent head start that we call a pro gap, gapping in the opposite direction of the intermediate trend there. IWM's finally catching up above its 200-day. That's gold, the commodity. Let's see if we can find anything else that's, those are the broker dealers. They're kind of consolidating. Home builders have been consolidating, you know, but they're kind of up here way above their moving averages. I wish they were consolidating on their moving averages. XLV Healthcare already ran, wouldn't touch that. It's ready for a pullback. IYR is extremely compressed. Look at this. I'm gonna pop an alert in IYR. This is commercial real estate, and I'd like to know if it breaks out to the upside. That'd be interesting. Again, a good case could be made why commercial real estate wouldn't break out, but we'll wait for what the price action. There's the TLT. We've already set an alert on that. Treasuries, you know, if the market pulls back a little bit, the treasuries could pop. The solars wouldn't want to get ahead of themselves. They're already ahead of themselves. So I'm not really seeing too much other than those financials be ready to do something. You see anything else over there?
No, Steve, you covered them actually, man. You covered pretty much everything.
Okay, well, I can.
Yeah, go ahead.
So, well, somebody's asking to share the sector. I can share the sector scan, but there's no ETFs in there. You have to add your own ETFs.
I'll copy and paste it in there.
Yeah, I'll do this real quickly before we call Scott in. I'll just show you. You go to Tools, Symbol List, and you'll see mine. You'd create a new list, but mine's called ETFs. And there they are. Suppose I can just grab those and let you populate. Yeah, let you populate those on your own, you guys that want to. I'll put that in after the cloud code there, and you're good to go. Anybody have a quick chart request they want to look at? I didn't see any come through.
Looks like some FENC.
All right, FENC. We'll do a couple here.
Somebody
nice.
did have another one.
Okay, nice pullback there. I would expect. Oh shoot, you know I'm dumb. I would expect. That's a nice little 3-day pullback, but I think before I draw, you probably know where I'm going to draw. I would expect to see some nice support in this area. So maybe right on the open tomorrow, they try and shove it down and make a new low from today's low, but get ready. That could be the level to bounce.
BMRA.
BMRA. Okay, BMRA. Oh,
Ooh.
That's a crazy one. Elevator down, stair step up. So I'd give this one a day or two to work itself out. Usually those don't reverse on their own.
That's a scary
bar
about
there. Apple. Look at how Apple's been riding. It's just Apple's a boring trend because it doesn't really consolidate. It just kind of grinds higher.
Mm-hmm.
HMY. I think it's Harmony Gold. I think that's right.
It's a gold stock.
That's going to be a good one, I think.
Kind of a reversal today.
Gold at 5. Okay, so you're in at 5. You know, I would just watch this level right here. You're probably going to see a test of this rising moving average tomorrow. I wouldn't be surprised. Don't be surprised if you see that, but it needs to hold no matter what it does. Yeah, if you have a request there, somebody's asking a request to build a scan. We can do those, but it's best to send those to info@trade-ideas.com. Scott will show that email again in a minute, and we can help do that over the email. All right, we'll do 2 more. We'll do Microsoft. Let's see. EBS, somebody mentioned that one. Oh, nice reversal candle. You could build off of that. Not bad, whoever asked about that one. Microsoft, it's mirroring the NASDAQ. It feels like it's in consolidation mode here. It doesn't feel like it wants to break out anytime soon. 2 more. Acre. Also pretty extended. I don't know where you're going to go from here. And then the last one, what are we doing? WIMI. Okay, I would have loved to see this one just recover a little bit better and bounce right up and close with a nice tailing wick on that moving average, but this one could be in play for tomorrow. I would keep an eye on it tomorrow. All right, one more, and then I'll bring Scott in. Get ready, Scott. SEL, not bad, decent candles to the upside. You know, if you're not in it, I would just put an alert right there and wait and see what happens. All right, that's enough. We'll bring in Scott now for any last minute announcements, and thank you all for your comments for the next trade of the week. Scott.
Yeah, thanks. Thank you, Steve. So a couple items on the way out. Why doesn't everyone make sure they've got the ebook about earnings season? Helps you with some strategy ideas to use during earnings season, which is upon us. So trade-ideas.com/earnings, get the free ebook. It includes some layouts that you can import via CloudLink to your Trade Ideas install. Also, we got a podcast. Trade Ideas Podcast is the search term to use in your favorite pod app. Just add us and be ready for the next one we release. We've had some great interview sessions already out this year, so do check out those past issues. The code SUMMERTIME is good for 15% off this first month or year of Trade Ideas, either new or an upgrade. So if you're on standard, want premium, use that. If you want to start a new subscription, jot that down. Use it before it expires later this month. Today Trader is Steve's Twitter handle. We also have @TradeIdeas, @QuantBot, and some others. If you follow one, you'll see them all. Facebook.com/TradeIdeasPro is the Facebook page to follow and share everything we post with your friends. And then any questions at all, just send them to info@TradeIdeas. That goes directly into our help desk and sends you to the right person to answer your question. So the recording of this webinar will be up later on tonight or tomorrow. Stay tuned for an email tomorrow from GoToWebinar with a link to the playlist. Thank you, Steve. Thank you, Andy. Have a great afternoon.
All right, great. See you next time.
Thanks, everybody. I'll see you Thursday. Bye-bye.